Imagine you are at a crowded market. A seller shouts, "Apples $1." You want them. You start to walk over. But before your foot even hits the ground, someone else has bought the entire cart. They weren't just faster, they were invisibly fast. This is the world of microsecond trading. It is a world that operates on a timescale so small it makes our reality look like it's moving in slow motion. We think of fast as a sprinter or a race car, but this is something else entirely. This is speed measured in millionths of a second. It is a financial arms race where the weapons are fiber optic cables and the soldiers are complex computer programs. Think about the blink of an eye. It takes you about 300,000 to 400,000 microseconds to do it. So, are human traders obsolete? Are they dinosaurs watching a meteor of pure data scream toward them? Not quite. A human brings something you cannot yet program: intuition, a gut feeling, an unquantifiable sense that something is off or that opportunity is near. A human can read the market's mood, sense fear and exuberance. Think of a seasoned ship captain. The vessel has GPS, radar, forecasts, but the captain feels a change in wind, sees water's color shift, knows when a storm is different, when the data isn't the whole story. A human trader might see political instability and instantly grasp ripple effects on oil. An algorithm might need explicit data points to reach the same conclusion. Risk management is another area where humans shine. An algorithm follows rules. If rule A, then trade B. But what if the context changes in ways the rules didn't anticipate? On May 6, 2010, the flash crash. Minutes erased nearly $1 trillion before rebounding. Programs reacting to a large sell order sold to each other in a loop of doom. Humans saw absurd prices and stepped in, using judgment, not just code. This is the human edge, handling unknown unknowns, asking, "Does this make any sense?" The human is the circuit breaker, the last line of defense against pure machine logic. They provide the wisdom, the skepticism, and the long-term perspective, so easily lost in a world obsessed with speed. Now let's turn to the bots. These are not clunky sci-fi robots. They are algorithms, lines of code, invisible, silent, unbelievably powerful. An algorithm is a set of instructions for a task. In trading, buy 10,000 shares of Apple if price drops below the 50-day moving average and a rival tech stock also falls. Precise, mathematical, executed without hesitation, without emotion, without a second thought. We've talked about microseconds. If a human in New York decides to buy in London, the thought forms, fingers move, order types, enter pressed, seconds pass. In that time, an HFT has detected, routed, executed, and moved on. The human is playing checkers. The bot plays a million games of chess simultaneously. One category, arbitrage, finding price discrepancies for the same asset in different places and profiting from the difference at microscopic scale. Another, market making, placing buys and sells, capturing the spread. Digital merchants ensuring a buyer and a seller for thousands of stocks at once. They now account for the majority of volume on many exchanges, rewiring the market's plumbing. It's no longer haggling humans. It's an ecosystem of competing algorithms. Predators sniff large orders, scavengers take tiny scraps, and worker bees keep the system humming. They are the new inhabitants of the market. To understand the microsecond market war, you have to understand that speed is everything. The single most important variable. The difference between winning and losing. We're not just talking fast computers, we're talking bending physics to your will. When others move near light speed, arriving a fraction slower means the party is already over. The info you receive is already old news. The price you see is a ghost. The real price has moved. Consider the infrastructure. One company, spread, networks, spent $300 million to lay the straightest possible fiber between Chicago and New York, blasting through mountains, drilling under rivers, to shave 3 milliseconds. To a human, imperceptible. To a trading algorithm, an eternity. The difference between getting the trade or missing it. Because light is slower in glass than air, firms built microwave links. Line-of-sight towers beating fiber by microseconds. That's how extreme competition is. Companies battle over airspace and tower placement. Tiny time advantages can be worth billions. This creates a hierarchy. The ultra-fast HFTs with co-location and microwave networks see the market in real time. The fast institutions sit milliseconds behind. Everyone else, retail, is seconds or minutes behind. By their quote, the ultra-fast have traded 1,000 times over. It is a system built on a fundamental inequality of information, where time is the most valuable commodity of all. On the modern trading floor, the clash is daily, a constant battle between human intuition and algorithmic precision. A human manager believes the stock is undervalued and places a 1 million share order. Before it's filled, HFT bots detect telltale signs of a large buyer. Sharks smelling blood. They spring into action. They can buy just ahead, then sell back at a slightly higher price. Electronic front running. And it happens in microseconds. The human sees the price rise mid-fill and pays more than intended, while bots pocket the difference. Humans devise ways to hide intentions, break big orders into randomized slices, use specialized algos to avoid triggering predators. It's cat and mouse, camouflage, and detection. Sometimes a sudden spike, is it real information or a glitch in someone else's code? Follow the machine or fade it. Human reason and skepticism are crucial. Traders now trade not just markets, but machine behavior. The bots are faster. For now, the humans are more clever. While humans versus bots is dramatic, reality is more collaborative. The smartest players combine them. Hybrid systems where human oversight guides machine execution, the Centaur model, half human, half machine. The human provides strategy, long-term vision, creative insight. The machine provides raw power, speed, and tireless execution. Think of a fighter pilot and jet. The pilot chooses targets, maneuvers, retreats. The flight computer handles thousands of micro adjustments, executing flawlessly. The pilot is the brain, the jet the brawn. Similarly, a human crafts a thesis, say renewables poised for growth due to new policies, sets strategy and big picture, then turns to machines to implement. Design algos to scan thousands of stocks, news, and data. When conditions are met, execute with microsecond precision, improve prices, and avoid predatory bots. The human oversees, monitors performance, adjusts as needed. One trader with robust tools can do what a floor of traders once did. Bots handle grunt work, calculations, monitoring, lightning execution, freeing humans to think creatively, understand narratives, and judge under uncertainty. The future belongs to those who best wield the machine. This high-speed world may seem distant, like it only affects billionaires, but it changes the market holding your retirement savings, your 401k and pension funds. Proponents say bots act as constant market makers, increasing liquidity and narrowing bid-ask spreads. In simple terms, it's cheaper to buy and sell, Shrinking spreads save all investors fractions of a penny that add up over millions of trades. But the market grows more fragile. Algorithms can interact unpredictably, creating feedback loops. Sudden, violent moves unrelated to fundamentals. A new systemic risk. Your fund could drop in minutes not from bad data, but a software bug or cascade of sell orders. It can feel less like investing, more like a casino. Hearing firms spend hundreds of millions on speed can erode trust. It reinforces the sense of a tilted game for insiders, discouraging long-term participation. The market's health depends on broad participation and trust. In 2025, the market is hybrid, part human, part machine. In a dance of cooperation and conflict, the microsecond war is won by algorithms. Speed is settled. The new frontier is intelligence. The race is to build smarter bots, powered by artificial intelligence and machine learning that not only execute at light speed, but also learn, adapt, and strategize, mimicking and perhaps surpassing human intuition. AI systems could digest satellite images, millions of posts, and more, devising strategies no human conceives. Seeing patterns and correlations invisible to us, unlocking efficiencies and profits. But it's a leap of faith, handing financial destiny to a black box. What happens when a self-learning AI managing trillions sells everything, triggering a global crash, for reasons logical to it but opaque to us? Who is responsible? Can you put an algorithm on trial? Accountability strains as systems grow in power and complexity, while our ability to comprehend and control them wanes. Tools meant to serve could become our masters. As we embed these technologies into our economy, where do we draw the line? How much control do we cede for efficiency and profit? The human-bot battle is a preview of a larger struggle to define our relationship with our creations. The market's future isn't just about who is faster or smarter. It's about who or what is ultimately in charge. And that is a question we must answer before the machines answer it for us.